Tyler, I've got a couple of stocks that are down 59.5% and 63.7% from their all-time highs. We're going to talk about whether or not they're screaming buys. I'm Jason Hall. This is The Smattering. Tyler's here with me. How you doing, buddy?
Probably going to be a negative Nancy, so you always bring me around.
Maybe conservative Carl. Maybe that's the way to think about it. You are conservative with your capital allocation, that's for sure. Tyler, before we get started, I want to remind everybody our videos are sponsored by The Motley Fool. We have a great partnership with The Fool, and we're going to help figure out if these two stocks are really screaming buys or not. Fool can give you 10 more great stock ideas. Go to our special link, fool.com/The Smattering, and The Fool is going to give you its 10 best stocks to buy right now. Be sure to check out that link after you're done with this video. So Tyler, we're going to talk about a couple stocks that are in the renewable energy industry. It's a space that you and I have both covered for a very long time. SolarEdge and Enphase are the two companies. I believe you own SolarEdge. I've owned SolarEdge and Enphase both at different points in time. Let's take a look at these businesses again. The stocks are down 59.5%, 63.7% as of when we're recording this video from their all-time highs. We've done a video before where we talked about how we're confounded by both of them.
Yes, for the longest time, we've always looked at them and said the solar industry has been a place where capital goes to die. It's a very quickly commoditizing business where the cost to manufacture a panel is down 60, 70, sometimes 90% compared to what it was 10, 15 years ago. So margins have always been compressed in this industry. And yet we have these two niche players in a obscure part of solar panel manufacturing, inverters or optimizers. Basically, it's to convert the power from solar power to something you can use in your house. And it's been amazing. They've maintained margin. They haven't been subjected to this commodity cost curve, despite the fact that this is a competitive industry and at the same time still growing at rather spectacular rates. And so we've always just wondered, like, when is the shoe going to drop? And this industry becomes a knife fight. But you look at the financials and go, the financials don't look that much different. It just seems to be how people think about them.
It continues to not evolve because what we've seen, I think this is important to set the stage for Enphase and SolarEdge and where they fit, is the solar panel manufacturers. That's where the commoditization has happened, right? The race to the bottom. Because at the end of the day, you want reputable, reliable products, but really it's the cost. That's the thing. It is truly a commodity. You are buying electricity. So we've seen this race to the bottom there. We've also started to see the industry consolidate, and it's starting to get healthier. And I think we're going to start seeing more of those panel companies start to be able to at least make some money. But what we never really saw the same knife fight competition for those panel level electronics. As a matter of fact, what we actually saw pretty early was some of the companies, SunPower, sold the microinverter business to Enphase, right? So we saw consolidation start there a number of years ago, and we haven't really seen a lot of the conglomerates. We haven't seen a lot of those companies really. Some have started to go after it, but then they've pulled away, right? As these two companies have focused and taken substantial market share, especially in the US distributed market, right? That's where these panel level electronics really play. They're the standard, they're required by building code. And now we're starting to see them move into Europe, right? So even in this environment where you think competition would heat up and they would start to get squeezed, they continue to generate really good margins. Let's talk about why the stocks have fallen so much this year. Tyler, one reason is when the Inflation Reduction Act was passed in the US that had substantial dollars that were earmarked specifically for renewable energy, we saw the stocks for a lot of solar companies run up substantially ahead of that. There was the idea that this legislation was going to happen. And we saw just a great bull run for renewable energy stocks. And a lot of them, the wind has gone out of the sails, to use a wind metaphor, talking about solar stocks. And the stocks have come down despite those great growth rates. Now, here we are looking at the stocks down this much. Let's answer the question. Thinking about these businesses, thinking about the growth rates, the profitability, is screaming buy, is it the right term to apply?
They aren't unreasonable at these prices. Forward estimates for Enphase earnings estimates 22 times. SolarEdge right now, I believe, is at 16 times forward earnings. Those aren't ridiculous numbers.
Particularly considering the growth rates, right?
Considering the growth rates. These are companies that have grown their top lines better than 20, 30% over the past couple of years. And that has been pretty consistent. There is some concern with residential. Anything tied to residential that requires taking out credit is going to slow down a little bit. but margins have been there for the most part. The one that has been struggling a little bit more is SolarEdge. They've been having issues dealing with inventory because their European business has not been as strong. You could probably ding them a little bit because of that. But overall, the long-term story for these companies, or the long-term thesis, doesn't look too interrupted, really. We haven't seen big players come in and really take their lunch like we thought they would. We haven't seen the commoditization like we thought we would. They're making some investments in some other components, either batteries or other ways to integrate solar power, electric vehicle charging, and a bunch of other things associated with the home solar residential kind of suite of products that is coming out. So as long as the thesis is still there, these aren't unreasonable prices. There's a possibility that you could sit around and maybe get them for a little bit less. And I certainly would want to keep some cash on the sidelines if that does happen. Let's just put it that way.
I like to think about these two from a cash generation and from an operating margin perspective. Going back to the beginning of 2019, SolarEdge has seen its gross margins decline a little bit. They were in the lower mid 30% range, and it's around 30% gross margins now. Operating margins around 10% operating margins, which is okay. You'd like to see it higher. They have started to ramp up over the past year. Then you look at Enphase, and Enphase, the gross margins have increased from 30% to mid 40s over the past 5 years, and its operating margins have gone from mid single digits to 22, 23% range. So those are great trajectories and trends. So I agree with you. I don't think these are back up the truck kind of prices. I think these are really good quality businesses, as confounding as they've been. Yeah, I couldn't fault investors for taking a dip in either one of these right now.